Hi, Rene. Thank you so much for joining us today.
Hey, it's great to be here.
Great to have you. Thank you so much. You know what? I'll go ahead and begin as everybody kind of joins us here. Want to say hello to you and Mark, Rene and Mark. Thank you guys both so much for joining us. And thank you to the listeners also. I'm really interested in today's topic, especially. I think generally we all kind of find ourselves using these common phrases like we're early and just wait until this all goes mainstream, but I'm not sure how many of us have actually taken that next step and considered how we actually get there and what obstacles we need to overcome in order to ultimately achieve that mainstream adoption versus just mainstream attention. And to have you guys here today to really discuss that and break that down is really exciting for me. So thank you again. Rene Reinsberg is the president of Celo, and Mark Richardson is the product architect at Bancor. Um, and I know, Rene, you only have an hour. So I kind of want to just jump right in and make sure we can really make the most of our time and still be able to answer any questions from the audience at the end, if that's okay with you both.
Of
That's
course.
Awesome. Rene, if you wouldn't mind starting, I'd love for you to just introduce yourself and give us just a brief description of what Celo is. And then we'll hand it over to Mark.
Yeah, absolutely. So Celo is a layer one. It's fully EVM compatible. We started out as a fork of Ethereum, and it's proof of stake. It's been carbon negative since the outset. I think our biggest claim to fame so far is probably the fact that we have an ultralight client, which really allows, even from a very basic mobile device, to sync with the chain and interact trustlessly with the chain, and that lends itself really nicely to a lot of the use cases we're excited about in terms of bringing DeFi, bringing NFTs, bringing really the digital economy that's being built on Web3 to people that are mostly accessing the internet from a mobile phone right now. Doesn't mean we only work it only works on mobile phones. Of course, it works like any other chain as well, but that's definitely a big differentiator. And I would say in terms of where we are now, the network has been live just under 2 years. It's processed over 100 million transactions, never been down. It I think if I look at sort of the community on Celo, I personally have a list of over 1,000 projects that I'm tracking. Of those, about 100 have raised venture funding over the past year or so, and it's really exciting. I think the sweet spot sort of in our community are things that are deeply aligned with our mission. So around inclusion, around bringing, for example, DeFi to more people out there in the world, and also climate. In our first white paper, we kind of set this target that we wanted the stable coins that are native to the Celo protocol be backed by, in large part, by natural assets, or in a big part by natural assets, to bring the use of this platform and of the currencies on this platform more in sync with the communities that we serve and the environment. And 4 years ago, 5 years ago, almost at this point, that was a tall order and sort of something that we felt maybe it would take us 10, 20 years to happen. But, as many of you probably know on this call, refi has really just been on a crazy pace. And it's phenomenal to see what people are building, people, tokenizing real world assets, bringing natural assets on chain. Their voluntary carbon markets have really started to flourish on chain, and there's a lot of really interesting building blocks that we're seeing coming together and really lead to a whole new economy that can likely have a big impact on climate change. So that's pretty exciting for us as a community as well. I'll stop here. There's a lot to kind of dive deeper into, but that's sort of the high level overview.
No, thank you so much for that. You actually brought up a few different things that I wanted to, like topics that I wanted to touch on. But before I do, Mark, I'd love for you to introduce yourself as well and tell us a little bit about Bancor.
Yeah, certainly. So I think you're fitting the theme of the call. So I am the product architect and the head of research at Bancor, and I'd say that Bancor is one of the major DeFi projects on Ethereum that is attempting to develop a product that is suitable for mass adoption. So in a lot of AMMs in particular, there is this implicit financial downside risk that requires a lot of education and specialized knowledge in order to manage correctly. And we think that if AMMs are going to be something that is appropriate for anyone to interact with, regardless of their education level or their specific specialization or their knowledge of economics and finance and DeFi, that there needs to be a way to remove that downside risk, right? So that everyone can interact with it and feel confident that they haven't made a bad decision or that they haven't appropriately hedged or whatever it is that that is currently used to to remain profitable on some of these other AMMs. So Bancor is really aiming to appeal to that mass market, and I think that is going to be a central theme for the rest of the hour.
So I have a question then, since you brought up the mass market, and Rene, you brought up the those that are lacking access to the internet. One of the main questions for this spaces was, whom are we building for? Was that always the vision? I mean, was that mass market and those that are lacking access to the internet, was that the vision from the beginning, or as the space evolves, is the vision evolving as well?
Yeah, and just to be clear, we're building for everyone, right? So I would want all of us here on this call to be excited Celo users or using products built on Celo, as much as people that don't have access to sort of the more traditional financial infrastructure, or are not happy with what that provides to them. I mean, internet is a core. Is necessary, but I think when you look at the fact that most people in the world now have access to the internet, doesn't mean that also translates into the same economic opportunity. And we've seen this concretely in some of the projects that are built on Celo, where, for example, in Kenya, there was a project recently that let people, was actually got some coverage in the media as well. I can try to share the link here, where people were able to do micro work on their phones and then be paid in Celo dollars, and then be able to cash out those Celo dollars through M-Pesa, local mobile money solution. And that really, to me, is a really exciting example of enabling a totally new use case, right? Because until now, really, most people in markets where there isn't easy access to, for example, something like PayPal, that is still not possible, right? You may have the ability to read news sites, but actually doing work on the internet, getting paid, and then being able to cash out into something that's useful in local context, that has been missing. I will say that I've been super excited learning about Bancor V3, and when I look at our users on Celo, they're different than the typical DeFi user on Ethereum, right? If I take an AMM on Celo, for example, Uniswap, over 80% of the users are accessing Uniswap from a mobile device, right? And the average transaction amount is obviously a lot smaller. This actually works well because transaction fees are also very small, less than a cent, right? So a lot of these use cases are only really possible when you have those criteria met. And when I look at Bancor V3 and I see things like impairment loss protection, I kind of see some of just the ease of use around giving people access. I think this aligns super well with how we've been thinking about just bringing more people into this world.
Yeah, so I think to follow that up, I think that we are, and everyone in the Web3, ecosystem, they should all be thinking that they're building for everyone, in my opinion. Right, this is sort of one of the core tenets behind the Web3 movement, and I think that in a way to to speak to that decentralization element, that self-sovereignty element, and that that accessibility and security without the need for a centralized supervisor. It really needs to be something inclusive, right? And I think that what Celo is doing extremely well there is that the economic barrier to entry is relatively low. The fact that transactions are I think the last I saw was something like 1/1000th of a dollar, which is pretty amazing. And is processing, I think, blocks every 5 seconds. This is the sort of thing that you can kind of imagine, being established and servicing the world's needs in a really productive way. And I do respect that they have taken this, climate positive, right, or climate change positive approach to it. Over the last decade, I would say that themes in climate change have really sort of underpinned the success of some of the most important companies in the world. Right. Certainly, I think that the fact that Tesla Motors are electric vehicles, and that is one of the more compelling answers to transport from a climate change perspective, is one of the reasons it was so successful. And if you have a look at sort of the alternative energy companies, especially in places like Australia and India, it's really the green energy alternatives that have seen the most significant growth, and the parts of the energy sector that are shrinking are still things like crude oil and coal. So I do think that there is going to be an element of environmental sustainability that enters the discussion in the blockchain world pretty soon, right? If it hasn't already. We already saw that just a couple of days ago that the European Union was voting on proof of work cryptocurrencies. And the reason for that is because of the impact that they have on the environment and the amount of energy that's required to sustain them. So I do think that this is a part of that inclusiveness and speaks to sort of a future proofing aspect to the Celo project that I have a lot of respect for. And as Rene said, I do think that the things like impermanent loss insurance are super important to being as inviting as possible to the wider spectrum of possible users. And coming more back to Bancor's mission statement about trying to create a completely decentralized world of liquidity. It's important that the barrier to entry be as low as possible, even with regards to education and understanding. Because if we build products that are only accessible, right, or only safely usable by people with specialized knowledge or with very large amounts of personal capital or institutional capital, then the question really is, like, do we even need the blockchain at all? There are a few different conversations that I've been in over the last couple of months where I really do think that some of the developers have kind of forgotten their Web3 roots, and they really feel like they're just building sort of new, fintech products that that probably would work even better not on a blockchain. And that don't need to be bottlenecked by the transaction fees of Ethereum or something like that. But the reason why they're building on the blockchain is because they know that this is going to be an important, part of the next phase of the internet. And so they want to sort of future-proof themselves against it. But I think that it's important that we remember that it is for everyone, and that if we don't have that sort of inclusive attitude, I think that we are destined to fail. So yeah, I'm with Rene. It's for everyone, and I think that anyone that's building for a specific niche should at least consider whether or not that's a sensible approach.
Yeah, well said, Mark. And maybe just to add to this, right? I think, especially if we look at sort of what's happened this past year, right? It almost feels like there's kind of this drive for TVL at any price, right? And it doesn't even matter what that TVL is serving. And And I think it's important to keep in mind that TVL is certainly a key metric, but it's in service of actually serving real people and for real use cases, right? I think you need everybody who understands we need liquidity to power a lot of these cool use cases we're dreaming about or we're working on. And so it's essential to track that and improve that, especially when compared to traditional markets and looking at it holistically, including the cost of cashing in and cashing out. Given that we're still not at a point yet where we can just fully live in sort of the digital currency world, which I hope we get to at some point. But yeah, I think for us, and I see Nikhil here on the spaces. He's heading up our DeFi for the People initiative that we launched last fall, and where really the objective is to bring DeFi to 1 billion people over the next 5 years. And we're laser focused on looking at, hey, what are the projects that are actually building for real people? We're excited about doing also experiments, pilots, when it's about trying new things. Mula, for example, a lending protocol in Celo, just introduced credit delegation, and we're about to do a really interesting pilot there where we are going to have employers basically vouch and provide collateral on behalf of employees to take out loans in a trustless manner. So that's really exciting, because I think that really connects I think this amazing infrastructure with real world use cases. And in many places around the world, right, we don't have reliable credit scores, right, and so there's not really good access to capital, to credit. And even if there is, then the rates are horrendous, right? And so being able to create a global kind of liquid market for credit, for really allowing people to hold a broad basket of assets, build wealth. I mean, these are, when you look at it, very, very simple things that can be achieved. And I think the key focus is the usability, right? How do we make this really easy for someone to onboard without necessarily having to understand everything that's happening under the hood, but abstracting some of the complexity away, leveraging the power of blockchain, of Web3, without necessarily exposing all the bells and whistles. And I think that's really something that I know a lot of founders in our community are focused on. I also know this is kind of, in a way, when we started, we looked to Bancor at the time. This is, 4.5, 5 years ago. And, I know that with sort of the Bancor app and wallet, there was also this goal to just, really make it super simple for someone to onboard. And that really resonates. And I think that still 5 years later is still top of mind, I think, for us as builders, and should be, because we're, other than maybe people now having bought some NFTs on OpenSea, most regular people are still not really in this space. They're not really using the products because they're not built for the everyday user.
You touched on a couple of things. Well, I would like to touch on a couple of things. You had spoken about, the interest rates and things in different, various parts of the world. And I used to live in Mexico. I have family there. I had just spoken with my sister yesterday. You get a loan from the bank there and your interest rate is 47% currently. So you can imagine that few and far between there are actually getting loans from the bank. So this pilot that you are running really struck my interest, and it made me, I actually watched the video of the pilot that you did in Kenya with the micro work. And I think that goes back to the how do we, work towards the mainstream adoption, because if you give these real world use cases to these people, and you give them this incentive, it doesn't seem as risky, I guess. They have this reason to participate with digital currencies or experiment with them. Oh, we lost Mark. To experiment with them and to really get to know the technology without feeling like they're at a huge risk for something. They're gaining something. They're gaining this knowledge, and they're earning money while they're doing that. And Mark, as far as Bancor, you're depositing your assets and you're not facing this impermanent loss. And I think that that's a huge deterrent, or can be, for anybody who's not really.
I think.
I'm sorry.
Yeah. So I think that, one of the points that I think that the point that you're making it's not even necessarily that a 45% interest rate is a bad thing. I mean, it obviously is, when there is no sort of credit crunch or something that is forcing these kinds of interest rates that high. But what's really tragic is that the banks don't actually have any money, right? The money that they're lending out at that interest rate is the money that their users, right, their customers have provided to them. And what's interesting is that there's this huge disconnect, right? There's the chasm between the 0.01% interest rate that the bank is offering you on your savings account and the 45% interest rate that they're charging borrowers to take it out is unjustified. And I think that, this is one of the things that DeFi does extremely well, because on protocols like Aave, right, or Compound, on protocols like Bancor, where we're doing exchange rather than borrowing and lending, the fees that are generated by the capital that's provided is issued exclusively back to the people that provided it. And I think that, it makes sense for the rest of the world to sort of be disgusted, right, with how the banking sector has kind of become this, this unnecessary tax, right, on top of a financial system that's already under a lot of strain. I think that, in many ways, DeFi was a protest against that kind of behavior. And the rate at which it has caught on, right, the number of people that it's onboarded in such a short length of time, and, really for a technology that's difficult to use. Blockchain stuff is not that easy, right? You need to learn how to use MetaMask. You need to learn how to use, a hardware wallet, I hope, for many people. And so, despite those bottlenecks, for, the space to have become as popular as it is, I think, if anything, is testament to just how sick we are of being treated, so unfairly by the financial system. And not even just in, like that theme of being unbanked comes up very frequently, and it is a really excellent point, right? That it is possible for financial institutions to deny financial resources to people just because they belong to a group that they don't like. And it's very easy to wield that kind of political power in order to alienate and subjugate particular components of the population. That's awful. But it's not even just that, right? I would say that even in relatively developed and very wealthy countries, there is still this bad taste, right, in our mouths about the fact that we just have to sort of take this kind of treatment and that there are no alternatives. And I think that that's why DeFi has become so successful. And I also think that it's why decentralization is going to remain such an important component of this conversation forever. I remember just earlier in the conversation, Rene said something about that, over the last 12 months, we've seen, these kinds of trends change. And one of the things that I was very disappointed to see change over the last 12 months was that we went from decentralization being something that is super important to the space to something that's kind of optional, and that disturbed me. I remember when we saw blockchains like Binance Smart Chain launch, and because of the low transaction fees and the speed of those transactions, all of a sudden, people were less interested in decentralization and security. And I just think it's important to remember that the reason we're here in the first place is because of that centralized authority is almost guaranteed to become corrupted eventually. But I'm wondering, what Rene wants to say about that, and if Celo is kind of, decentralization maximalist, or if there's kind of a pragmatic approach. I'd really like to hear from Rene about it.
Yeah, and look, I think I very much agree that the market right now is not necessarily, considering sort of the trade-offs, right? And you see this in many areas. You see it, I think most or the most obviously in bridging, right, where you have really very little. If I compare it to like 4 or 5 years ago, when we set out to kind of build and launch kind of layer one, right? We actually kind of approached this very much through the lens of kind of a community, right? We had an incentivized testnet, and the ultimate network was stood up by independent validators all around the world that had participated in that incentivized testnet process. And neither the Celo Foundation or C Labs actually has run nodes in the network. And I think there's a lot of work that like goes into launching a network that way. And you brought up Binance Smart Chain, but I think you see this in other areas too. And I think bridging is a great example, right? So a regular user, even like some institutional users, right, bridging large amounts of money over centralized infrastructure versus decentralized bridging infrastructure, without probably understanding the trade-offs they're making. And I think it's gotten worse, right? I think back when we launched the layer one, there was a lot more conversation in the market around decentralization of layer ones and the validator set and so on, versus what we've seen in terms of the discussion around bridges, where we have billions of dollars sitting, controlled sometimes by like just a few people on a multi-sig. So that's I think I very much agree with you that if we truly want to scale this infrastructure and have it avoid some of the kind of pitfalls that you get from centralization as things get big, but also just from a resilience perspective, optimizing for that is critical. And I think we've kind of always leaned on the side of approaching things more decentralized than probably sort of the average market participant or competitor. I think that is also somewhat tied to how we think about building Celo. We've from the early days, we've kind of really opened our arms to anyone who shares our mission and our values and wanted to be a part of building Celo. And so in many ways, that just kind of very naturally led to really kind of a community even before mainnet had launched. And I think that kind of is less of a, hey, let's build something decentralized, but that was just a recognition that, the mission we've set out to achieve is massive and, likely impossible for one team to make happen all by itself. And so I think we recognized early on that the best products, the best solutions, the best sort of infrastructure kind of holistically here is likely going to be built by just broadly the best teams in the space. And so in many ways, I'm excited that with sort of the advances in interoperability, we're able to not just limit that to people who are just building on Celo, but tap into the brain power of teams of protocols that have been battle tested, that have existed in other ecosystems. And obviously the Ethereum ecosystem, we kind of always see ourselves as sort of like the little brother to Ethereum. But there's just an incredible brain trust and a lot of founders who are very mission aligned. And so that's been really exciting to see. I feel like people that share in that mission, our mission, and so have that shared mission, be able to work together. And I think if you look at DeFi for the people, you recognize a lot of other teams from sort of outside the Celo ecosystem that have joined into that initiative to really together help crack how do we get to more people that are being onboarded. I want to make one kind of additional point here, and I think this is oftentimes this conversation is very much focused on sort of the individual user and kind of consumer in a sense. And I think that's where we are today, right? I think so much of sort of the potential, the upside comes from just giving someone with a phone, right, the ability to easily, save, transact, build wealth, take out a loan, whatever it is. But I think what's often sort of overlooked, and especially when we look at the traditional banking system, is just the sheer amount of value that this space can also bring to small businesses, and I mean big businesses as well, but small businesses that, for example, are operating across currency zones, across country borders, and today really don't have a good way to manage that risk. They can call up their bank, and their bank can quote them cross currency swap or some other hedging solution, but guess what? Like those rates charged on those products are almost as high as the rates, Jen, that you mentioned for Mexico lending in terms of the cut that the bank will take, right? And I think this is really, when I think about how DeFi can level the playing field. While right now the focus is really on individuals, I start seeing companies also thinking about, hey, how do we leverage this? How do we hold our treasury, our working capital in stable coins? How do we earn yield on that? How do we start thinking about different currencies? And so I think that's, to me, it's really a sign that we're still extremely early in terms of use cases, but also the capital that's used in that sense in DeFi. And I think between that and the climate assets coming on chain and being traded, I think for AMMs like Bancor, I think there's going to be a whole new market kind of opening up in the coming years, that will I think be orders of magnitude bigger in terms of like the transactions going through it than what we've seen so far with DeFi.
Mark, do you see a little bit of that with Bancor at the moment? The businesses kind of coming through?
Yeah, I mean, I've spoken with our community before about this, but there is a huge latent interest in DeFi. Like it's very difficult to exaggerate its magnitude. It's just enormous. But due to things like regulatory, let's say a lack of regulatory clarity in some cases, and also things like stewardship or custody problems, that it's very difficult for them to participate. But I've already been on conversations with like fiduciaries that are wondering if keeping money in traditional finance exclusively is really makes sense anymore. As Rene said, that there is this, if there is this opportunity to use DeFi to earn a higher rate of return, then a lot of these people are kind of sweating that they're not really doing right by the people that they represent. And so it's unclear what's going to happen. And I think that with things like stablecoin yield farming and things like that, like Rene speaking about, that's likely to remain for a fairly long period of time. But what I'm really interested to see happen, and I think that this is more important and speaks a little bit more to sort of the climate assets that Rene was talking about, like carbon credits and things, is that we're going to see more and more of these institutional and government level type of assets start appearing on blockchains fairly soon. I speak to a lot of people developing in this space, and a lot of these people are very, very close with governments and regulators to try and work out precisely how blockchain technology can be used in a compliant way, where we don't have vast amounts of capital susceptible to smart contract risk, for example, which is unacceptable. But it will happen. It will. I've often said that I expect it will happen, but I'm now 100% convinced that it's already happening, and that liquidity solutions like Bancor are right at the heart of these kinds of discussions. Not Bancor exclusively, but the product that's being offered. And I do think that the fact that Bancor has this kind of self-insurance policy makes it much, much more attractive for these kinds of extremely large or extremely sensitive types of collections of assets or high net worth individuals to interact with. I've said previously in other calls that we're basically one reinsurance policy away from looking a lot like something that would resemble a traditional financial institution or something like that. So yeah, I do think that it's all moving that direction. I do think that we're going to see more real world like assets, tokenized representations of value in the real world appearing on blockchains very soon. And I expect that when they do, that Bancor will be right there, ready to whitelist them and provide single-sided staking, impermanent loss insurance, and everything else that we're designing into V3. I think that this is unstoppable at this stage.
So you see more of them kind of coming around and starting to use the technology than you do, sort of, you said that DeFi was kind of almost like a rebellion, against central banks and how they're representing their users. At this point, you think it's past the point of them rebelling against DeFi and more so coming around to the fact that we're here to stay?
Yeah, sort of. I think, it's worth pointing out that the scope of people that suffer as a result of how centralized banking is set up is pretty broad, right? Even the cells, the financial service providers that operate inside of the banking umbrella, they are equally harmed by what banks are doing, right? It's a very small collection of people that actually see the benefit of how banks kind of rip off their customers and redistribute the profits that they make back to their own balance sheet. So it's a very, very small world of people that actually benefit there. And so most of the cogs inside the banking machine are very enthusiastic for blockchains because they don't like, they just as disenfranchised as the rest of us. I don't think I've ever actually spoken to anyone inside the banking system that enjoys being there or thinks that they're being fairly represented. So there could be there's got to be someone inside that system that's getting this, that's reaping the rewards of it. I just haven't met any of them yet.
I have one more question. I want to kind of circle back to when you said that you were disappointed over the last 12 months with the lack of, decentralization. So I think the safety for users has always been a main concern for regulators when it comes to blockchain. And you were saying that centralized chains are really sacrificing on the safety aspect, the security aspect. Yeah. Do you think that hinders mainstream adoption? Do you think that that's going to kind of have to wean itself out? Or what's your view on that?
Yeah, it should.
Rene, you also. Sorry.
Yeah, I think it should hinder mainstream adoption. I think that it was tragic that as Ethereum became so popular, right? As so many interesting products were starting to really get their wind behind their sails, that it caused the base token to balloon in price, at the same time as causing the gas rate to rise parabolically. And so Ethereum became pretty inaccessible to most people fairly quickly, just as it was becoming interesting. And I think that one of the, this presented an opportunity to start launching products like Binance Smart Chain, like Polygon, like Solana, which, due to the sort of decentralized nature of the way that those chains are run, that they could offer a dramatically reduced gas fee, and they could launch products very quickly, and that people that were sort of arriving on that that first wave of FOMO, who probably weren't as schooled in what blockchain is, what Web3 is, and, why these principles of decentralization and security are so important to us. And so when they arrived on the scene, they kind of naively just thought that the cheaper the chain is, the better it is, right? That it doesn't make sense for an expensive chain to exist. And so I think it was in that initial push of new users into the space that we sort of did forget about the importance of that decentralization. Now, what's interesting is that suggests the opposite, right, of what I was claiming, right? That clearly these centralized chains have been an important part of the onboarding process. And maybe they will continue to be, right? I'm not necessarily saying that every single blockchain needs to be decentralized or needs to be super secure. I actually think that there are going to be, many chains, and some of them, it makes sense for them to remain centralized. Either to keep the fees down, or because of the type of user or the type of asset that's being traded on it. Maybe a permissioned blockchain is required in some circumstances, but not as a solution to the types of problems that gave rise to the necessity of blockchain in the first place, right? For the types of things that we want to onboard, most of the world's inhabitants for, that kind of stuff absolutely should be decentralized. But for like specific institutions, right, or specific applications, probably a permissioned centralized blockchain is fine. But that's okay, because it's not something that everyone's expected to use.
Rene, did you have an opinion? I don't want to go to my next question. I have one more question, but I would like to give you a fair chance to answer that question as well.
Yeah, and sorry, I lost sound, and then I had to reconnect, but I'm hearing everything great again. So yeah, look, I think there's from a product perspective, the sort of decentralized applications, or from a user perspective, right? You have to be at least at par with what people get, in sort of for example, a custodial setting, right? And I think that's maybe a high bar in some areas, but I think unless, or if you're truly competing with people that have that kind of alternative, and you're not there, I think it's just a really hard pitch, right? Because explaining sort of the benefit of decentralization, censorship resistance to a regular user is, it's just not something you can do in sort of 3-click screens, right? As you onboard people to your product. And so I think there's kind of some general education as kind of broader Web3 kind of that we'll have to do, right? For our communities. But I think it just requires a certain discipline from a product perspective. I think Valora actually is a great example. I don't know if who here on the spaces has Valora or has played with Valora. It's the wallet, one of the wallets for Celo. And when you use it, you don't actually realize that you even it's even a crypto wallet, right? So it's really abstracting a lot of that technical infrastructure away, and whether you use it to just hold stable coins and earn sort of an interest yield on those stable coins, or whether you use it to send a payment like Venmo to a friend halfway across the world, or whether you use it to actually use some of the DeFi dApps on Celo, or even like buy NFTs or whatever. That's all kind of really with sort of the bar of being as good as sort of a centralized experience. And I think that's the right way to kind of think about these products. I think we cannot expect users to do the extra work. And I know this is kind of a mentality that's shared by many people in our ecosystem. I will say that like this will something that's going to get better, right? It's more
Rene, you're kind of cutting out just a little bit here.
Sorry. No.
That's better.
Oh, fantastic. Yeah. Sorry, it's my headphones. I think this is something that kind of is getting better, right? I think even the fact that these conversations are happening now, I think is a good sign. And I think also when you are sort of in a bull market, it's just hard to make the space for having that conversation, right? I mean, people that are coming into the space at those times, right, are there for something else, right? And I think this is kind of like parallel track to, I feel like, the work many of us are doing, where we're really trying to connect this to real world use cases, and where this is an enabler for a problem, or solving a problem that exists in the world versus, kind of a mechanism for people to kind of make a quick buck, right? And I think that's kind of ultimately, where you either build for the long run, and I think for certain parts of that infrastructure, it needs to absolutely be decentralized, not just from a censorship resistant security perspective, but just from a resilience perspective. If we want this infrastructure to be around in 100 years, then I feel like that's the only path. But that also, I think is a very different objective, right, than many projects that are just not even thinking about this or are taking shortcuts on centralization. And that's fine. I think it's just kind of creating awareness that there are fundamentally two different approaches.
We have a little over 10 minutes, 10, 15 minutes left before you've got to head out, Rene. So if any of our listeners have any questions, don't hesitate to request to speak. In the meantime, though, you were talking about users. And when I think of users, I think of people like me. I'm a DeFi user and I enjoy learning about all of this. But I also think of the businesses on the other end. You brought up the businesses, but all of those that are unbanked, it gives them this opportunity to receive money, worldwide. But it also needs to be the businesses on the other end accepting this infrastructure also. I mean, they have to come on board. And I think that's necessary for us to reach that mainstream adoption as well.
Yeah, absolutely. I think that, for anyone who's sick of hearing the unbanked argument, I just want to be, I think we need to be kind of frank about what it means sometimes, because it's not just about, denying banking services to someone, or at least not in the way that I think a lot of people assume. It can also be about the bribe, for example, that you have to pay the teller before they will, cash your check for you. And this is very, very common, right? It's you don't have to go to some something that's completely off of the grid. You'd be surprised at the types of places in the world where, just having a bank account, because someone controls it, that's not you, that when you actually go to the branch and ask for something, that, you have to pay the person on the other side of the table in order to perform the action for you that's required. And this is true of businesses as well. There are places in the world where if you want to set up like a store, for example, that, the things that you're selling, or the way that you transact with your consumer base is going to be via something that requires you to bribe them. And in a way, some of the credit card companies kind of have systematized that bribe. It's relatively small, but it's still sort of a bribe system. If you want, your consumer base to be able to use the credit card that you've issued with them, that you have to take, you have to concede a cut of the profits that is generated as a result of that. So that's kind of a mild case, but there are many extreme cases of it. And so that, I think what cryptocurrency in particular is able to address is that in many of these situations where you have no option, right, where that bribe that you have to pay to someone in order for you to be able to transact with your consumer base at all, right, that can partially be alleviated because of this kind of self-sovereign nature that blockchains provide. Now, it's I would say that it is still largely perceived as an extremist attitude, right? That it is it's alarmist or something like that. But I have visited some of these countries, and it is a real problem. And removing that centralized control from that component from the business side and just allowing people to transact with each other on a blockchain has huge advantages and I would say that this is a problem that affects more people than it doesn't, personally.
I'd like to touch on that, but Rockman, I want to give you an opportunity to speak and ask your question if you're there.
Yep. So first of all, I just wanted to thank you for this call. This was really amazing. But to the point about centralization and how everybody's using Binance and other resources like that, I think the biggest advantage that they have is just the UX and UI and the sheer amount of marketing and the funds that they push to onboard as many users as they can. And I think that's what we're struggling with as a decentralized options, that we don't really focus as much on marketing, which is really important nowadays. And I think if we would just focus on that a little bit better, have better tutorials, more YouTube videos explaining how everything works, why decentralization is so important, and what we're trying to achieve, maybe that would help to onboard more people interested in the space. But thanks again.
I think it's a fantastic point. Look, I think, and we have a big team at the Celo Foundation focused on education and just creating more awareness for what this technology can already do and the products that people are building and how they're solving these real world problems. And yet you're right. I think the megaphone can't be big enough to tell those stories. And I think this is how we learn. And I think I very much agree with this. I want to also, I think, add a point to the previous, which is a little bit related. I think there is kind of like this future where people do get paid directly in digital assets, can use those digital assets to pay for everything they need to pay for, including paying for taxes, right? And they never have to kind of on or off board to sort of fiat, right, or to sort of the current system. We're not there yet, right? And so with Celo from the outset, this has been a big focus, and there's tens of companies in our ecosystem that are focusing on just that, just creating better on and off ramps, whether that's to mobile money, whether that's to bank accounts, and a lot of these efforts are highly local in nature, right, and understanding sort of the local systems and providing great APIs for other people to then build applications to leverage that. And I think, to me, this is like for anyone listening here who comes from the traditional financial world and has that expertise. This is something really valuable to build. If you can build a way that makes it easier to kind of on and off ramp, I think this is really today where I think 10% yield on a stable coin is great, but not if it costs 10% to cash into it and then another 10% to cash out of it. Then it will take a long time for you to earn that yield, even just to kind of come out par, right? And so I think this is where when we ask, hey, why haven't more regular people adopted this? Why not more people tapping into the benefits of DeFi? This is a big factor. And so I think this is where we're heavily investing. We're excited to support teams that are building more on and off ramps. And I think that's kind of that's not the sexiest work if you want, right, if you compare it to everything that's happening in Web3, but it's probably one of the most needed things for us to get to mass adoption.
Good points. Thanks.
Thank you, Rockman, for your question. And thank you, Rene, for the reply and the addition to it. We have just a few minutes left. Canuck, I want to give you the floor. Make sure you get your question in there before we have to jump off. Are you there?
Yeah, I'm here. Thanks so much for this conversation. Thank you, Rene, for presenting today. Real great opportunity to learn about Celo. One of the things you highlighted is the lightweight nature of Celo and potentially its applications. Do you see certain advantages to that in the use cases of, say, IoT and potentially like parametric insurance and things like that? And are there applications being built around decentralized insurance and things like that? That's it. Thank you.
I mean, I can give a quick view here. So I think insurance is pretty underexplored in general, not just on Celo, but in the other ecosystems as well, especially as it ties to real world use cases. Some of that is just it's driven by sort of lack of reliable Oracle infrastructure to bring sort of the events on chain in a reliable manner. But I think that is, I think it's just, similar to, other, I think the other great kind of parallel example I would give is most of, trading, most of sort of, if you look at stable coins, right, we have liquid spot markets, but we don't have really future markets yet, right? And so I think this is just the evolution of like, as spot markets get more liquid, as kind of volumes grow, as we start seeing yield curves, as some of the Oracle structure becomes more mature, it's actually all these things are kind of like feeding into then being able to build some of these more richer protocols, which I think insurance is kind of a prime example for that. And I know there's for example one protocol I'm thinking of, which is around e-mobility and sort of using a kind of a token protocol to just in a way kind of solve some of the supply demand kind of challenges that you would usually have when trying to deploy that kind of infrastructure in a new market. And I think that would fit really well for I think that's kind of a perfect example for a use case for a protocol that would leverage an insurance protocol. I think we're just not quite there yet. I think there would just be too few people who'd want to, buy that insurance. And so I think it's just a little early, but I think it's certainly not too early to start building and experimenting. So if that's something you're doing, I'd love to chat and learn more.
Thank you so much, Canuck. That answered your question? Okay, perfect. Rene, I know that you have to jump, so I don't want to hold you up, but I am curious if you guys have any final thoughts before we end our call here.
Look,
Go ahead, Rene.
Yeah, for me, look, it's just really nice to spend this hour together. I remember like Bancor was one of the first protocols that I stumbled upon when coming into the space, and it's just been exciting to see the focus on simplicity, usability. I love V3, like I said in the beginning. I think these are some really great and needed innovations to get more real world adoption. So yeah, I want to applaud you guys on everything that you've built, and excited that we had the chance to do this AMA.
I'll be in Barcelona next week, by the way. Are you going to be at the Celo conferences?
You bet. Yeah. It'd be fun to meet in person. That's fantastic.
Wonderful. All right. Yeah, let's connect. I'll see you there.
Awesome. Thank you all.
Thank you both so much. It was an amazing discussion. I really appreciate you both joining us. And thank you to all of our listeners as well for joining in. I hope you all...
Thanks for hosting us, Jen.
No, absolutely. I hope you all have a great day.